Digital marketing seems to be the mystery that most entrepreneurs struggle with, and real estate investors are no exception. The truth is, there are multiple avenues to success. Those experiences will be best shared by the guests on this podcast. My name is Jason Wright, and I would like to welcome you to Real Estate Investor Marketing Stories. What is happening? Jason Wright here, bringing you episode number 27 of the podcast. I've got another great guest with me this week, as usual. And before we get into the meat and potatoes of the show, you get to hear random thoughts by me. So as a continuation of what I've kind of talked about in the beginning of the last two shows, this crazy trip from central Indiana to coastal Georgia, here's something to consider, right? So my main business is obviously a little bit different than yours. Digital marketing, specific to real estate investors, specific to ActiveCampaign. So very, very niche. But when we were working on the Indiana house, and as we moved down here and as we got settled and established here, as you might imagine, there's a lot of things with marketing that I couldn't do. This podcast, as an example, a lot of things I couldn't do. Couldn't send out emails to my list. We could get basic social posts out on social using a tool called Buffer. We can schedule them in advance. And a lot of our social strategy, you have noticed, is uplifting, motivational, positive affirmations. And there's some stuff mixed in about taking chances, going for it as well. It's targeted at real estate investors. So it's a little bit different than a lot of companies. So you're not seeing me create a ton of videos. You haven't lately at all. You're not seeing me create a lot of posts personally, et cetera, et cetera. So my point is, through all of this disruption, which was by our choice, a lot of my marketing, I couldn't do it. I'm human. I can't do everything. I can't be in multiple physical locations at once, blah, blah, blah. What did this do to business? Well, strangely, July was our second best month of all time. How? Marketing automation. Talk about this stuff all the time. Building a sales pipeline, building a new investor pipeline is crucial to the survival of your company, right? I don't know how to say that any more clearly. And anything I say to you ever, podcast, video, face-to-face, email, text, it's all the same based on my actual experience. I've been doing what I'm doing almost 8 years. A lot of bumps and bruises, a lot of failures along the way. But the beauty for you is the listener, the watcher, this stuff's based on real experience, right? My experience. So having a sales pipeline in place, having marketing automation, nurturing folks through email, through two-way text, through some basic posts on social media that we schedule, through ringless voicemail has allowed me to look away from business for a little bit, rely heavily on my team, and not only maintain the business, but actually grow it. Do you see how important that is for what you're doing? These tools are universal for any business, especially a business like yours. So just something I want you to consider. You know, do we rely on the same things when I travel for pleasure or for work as well? Absolutely. Okay. You can't do it alone. If you are the marketing machine for your business, it's just you. What happens if you go away? Now, would my business suffer if I never came back? Yeah. But it would hang on longer than you think. So anyway, something to think about. All right. Today we are talking to a great guest, as I've promised you. The guest this week is Brian Armstrong, a friend and client of mine. He is the founding and managing partner of a company called Progress Capital Group. He's focused on generating passive income for busy pros, which is a great niche to be in. His journey with real estate started in 2012. He's done flips, he's done single family investments, etc. since that time. And now, working on the multifamily side for his own investors. By day, he is a 20-year licensed structural engineer as well. So very interesting dude. Now let's listen in to the conversation that we had together. Hey, Brian, welcome to the show, man. Good to have you on.
Thanks, Jason. It's great to be here.
Good deal, man. So share with me and everybody watching and listening your story, how you got started with real estate investing.
Ooh, good question. So, I think there's always been an interest in real estate, kind of, you know, rattling around in there, I guess is the way to say it.
Mm.
Um, when I was a kid coming out through school, always liked sort of the math and the physics side of classes. And I think that pushed me towards my engineering job. So I'm a structural engineer by trade, been doing that for years. And I think deep down there was sort of an interest in buildings and real estate and structures, which that combined with the math and physics is how I ended up on the structural engineering side, not any other type of engineering.
Yeah.
And so I think, looking back on it, never knowing it at the time, but looking back on it, I think that's how it all came about, is that it always sort of an interest in real estate underneath there. And
Yeah.
the longer I've gone on with the engineering thing, I've been doing that for a while. I think the interest in real estate has continued to blossom and really turned in more to the investment side, you know, owning properties, improving properties, seeing the benefits of multifamily, just all that kind of stuff, blossomed as time went on, and more exposure to it, all that sort of thing. So,
Very nice. Yeah, my son, when you were describing that, my son has the same interest as you. I mean, he's got a 3D printer and we have a glow forge, and this guy is like making stuff all the time. And I'm like, how in the hell did you figure that out? And he'll be like, I just took the measurements. I'm like, it's all like curved. Like what measurements? Like, what do you, like, my brain doesn't work that way. And he loves it. And I was talking to him yesterday about like investing, and he doesn't have an interest now, but someday I think he probably will, because I think he's not going to love working for other people at all. But he's one of these guys that's got to figure out his own path. But he's got the mind like you, and he loves the physics and the math and kind of the chemistry and experimenting, how things work. So I can't tell you how many things of mine he's taken apart, see how they work, and then he never puts them back together. I'm like, come on, man.
there's always some parts missing.
Oh yeah. Oh
Yeah.
yeah. Awesome. So what asset classes and or markets do you typically focus on, and why?
Yeah, so I'm interested in multifamily apartments. Sort of that class B range, or a class C plus property, let's say, in sort of an improving B neighborhood.
Yep.
I like it just because it's fairly solid. It's fairly predictable.
Yep.
In the proper markets, there's going to be a demand for it. Everybody needs a place to live. Everybody needs a place that is, reasonably affordable for themselves.
Yep.
And I'm not talking just, affordable housing. I'm just saying that people need a place they can budget and afford. So yeah, it makes sense. It's been a successful investment class for generations,
Yep.
And it'll keep being so. There's a pretty significant shortage of housing in many markets in this country. So there's always going to be a demand for a good apartment. As far as what markets to look in, the stuff that I'm focusing in on these days, I like Kansas City. I think Kansas City is a fantastic market in the Midwest. They're growing. There's industry coming there. I mean, it's right in the middle of the country. So the location is fantastic for transportation and all sorts of stuff. I like a couple of markets in Texas still. I'm a big fan of San Antonio. I think that, Dallas and Houston and Austin have grown so much. And I think there's still some room to grow in those, especially Dallas, which I like Dallas as well. But I think San Antonio has a lot of room for growth relative to those other three markets. And then I'm actually a big fan of the Carolinas as well. Just, not the entirety of both states, but there are a lot of markets within both states that do make a ton of sense. There's a lot of people moving to the Carolinas. There's a lot of industry coming there. A lot of tech, a lot of biotech moving to North Carolina. People moving there because of jobs means more people, more demand for housing. So all those things that drive traffic to multifamily apartments and, keep the demand up and keep rents increasing. Those are always the things I'm looking for. I think those are the markets that I like the most right now.
Yeah, makes a lot of sense. And I obviously I asked this question and talk to people who were potential clients and people on the podcast and just friends. I talk about this all the time. And it's funny because like I'll see like a little bit of shift in the trend. And, you always hear like Texas and like Phoenix are real popular, but the Carolinas in the Midwest has been coming up a lot in conversation. I'm in the Indianapolis area and I've talked to 3 or 4 people in the last week that are like focused heavy on Indy, which is kind of interesting. But no, that Kansas City market, I've been to Kansas City. It is right in the middle of the country. Everything you said makes total sense. So super interesting stuff there.
Yeah.
Yeah. Go ahead.
No, like you said, it's important to find the right markets, and to be able to shift your focus if things change. But I think, those are kind of the markets that make the most sense for me right now.
And multifamily really is like the foundation of all real estate investing. It's never going to go away. The one deal that my wife and I are in right now is multifamily, Chattanooga, Tennessee, 121 doors, and so far so good. So yeah, it makes total sense, man. When I started looking at it and wrapping my mind around the logic, I was like, yeah, totally. Everything you're saying totally makes sense. So it's good stuff, man.
Yeah.
What simple marketing strategies have kind of allowed you, what initially worked for you as far as getting investors to invest with you? What's worked and helped you out so far?
A big focus of mine so far has been just to share information on LinkedIn, just about my thoughts on real estate investing, different markets that make sense. And my whole thing, I'm not trying to be one of those folks who's telling you to sell everything you own and just dump it all into real estate.
Those guys are out there, aren't they?
I don't think that's the right strategy.
Yeah.
My whole take is that, look, keep your stock investments, keep your 401k, keep that kind of stuff going. But maybe instead of just relying solely on those items, maybe consider real estate as an alternative to help to offer some diversity. It's just don't plug 100% of your retirement into the 401k. I mean, we all saw what happened in the market over the last 18 months. It's down, it's up, it's down, it's up. It's a bit of a roller coaster.
Yeah.
So maybe keep some of that, but put part of it in real estate as an alternative asset class that behaves differently than the market. So just trying to share information like that, reaching out to people who ask questions, encouraging people to ask questions. So yeah, that's kind of been my main focus.
Yeah, LinkedIn is solid, and you have definitely a more conservative approach, which is smart because diversification is the key. I still have a Roth IRA. I've got the solo 401k, which I use to invest in real estate. Got a little physical silver, got some crypto. It's, got a little bit of liquid cash as well. And it's like, like you said, when one thing like crypto, you want to talk about volatile. Yeah. You put everything, there was people that were like getting mortgages out of their home. And I'm like, man, when it's going great, when the market's bull in crypto, it's the most exciting thing in the world. But when it's not, oh boy, there's some people that are, ruining marriages and everything else over it. So yeah, I think diversification is a key. And your posts on LinkedIn are great. I see them a lot in my feed and they're really well put together. And there's like somebody out there for everybody, right? It's like your style is different than my style, different than the guy that's like, hey, do a cash out refi, take all the equity out of your house, sell your cars, put everything to real estate. Like there's some people that are into that. It's just not your style and not my style. So good stuff, man. I like it. So what would you say the biggest mistake is, or the biggest regret you've had in regards to your marketing so far?
Just in regards to the marketing, I would say, as I mentioned, I'm an engineer by trade. And so I am not a natural marketer.
Yeah.
It is not something that comes easy for me per se, which is ironic given my dad actually was in marketing for tech companies for a long time. But I think for me, it's just sort of, embracing my voice and my thoughts and sharing them with the world, honestly. I think that like you said, there's something that kind of appeals to everybody out there, and I'm not going to appeal to everybody, and that's okay.
I won't either. Yeah.
But I think that being able to get over that hurdle and find the comfort level with sharing the information that I think is relevant, that I think is important and makes sense.
Yeah.
I think that's probably the biggest struggle I've had with the marketing. And, being an engineer, I always want to be right, and I always want to make it perfect kind of thing. It's got that's a big problem sometimes.
Yeah.
And it doesn't have to be, it just has to be information that people can take in and process and, do what they will with it. You know what I mean? And it's just getting through that hurdle was challenging. And I still struggle with it at times. And probably will for the foreseeable future. But, the comfort level is much more there now than it was before. And I think that it gets easier as time goes on.
Yeah, that all totally makes sense. So there was I think it was a course that I put together a couple years ago, and I just assumed people wanted this. Didn't ask anybody, just assumed. And I literally spent like 6 to 9 months building this thing out, making every detail perfect. I was telling my wife, watch this. I launched this thing, made a bunch of noise. Nobody bought. Nobody bought. And I was like, no, I'll do it again. Made more noise, follow-ups, nothing. No interest at all. So I reached out to some people that were entrepreneurial friends, and I got their feedback. And they're like, no, it's a good offer, but there's nothing about that offer that like anybody has to have. And I was like, that's weird. So then I was like, man, I wasted so much time with this thing, and I failed a whole bunch of businesses and marketing things. But from that point forward, I was like, from now on, we're rolling with good enough, right? It's going to be good enough to get out there, and we're not building any new offers unless we pre-sell them. So like I have a course I'm finishing up now. I've been selling this thing since December, and it'll be done this week. Like people have been buying, and I've been telling them like in a video, like, here's what you're going to buy, but it doesn't exist yet. So buy this knowing your price is better, but it doesn't exist yet. And it should about the first quarter. And here we are in May, but it'll be worth the wait. But is it perfect? It's not perfect. It's going to be good. And as I get feedback, I can go in and make it better and better. And that's kind of like our process. But out there is more valuable than perfect and not out there. So I talk to people just randomly a lot that want to start podcasts, and they're like, I've been putting it off for 2 years. I'm like, just record and start publishing shit. Like you'll find your voice and people will find you, and it's a whole process. But the idea of perfect is, the questions I'm asking you, I type these up before my first episode in about 10 minutes, and it gives me a general framework to work with, and I can kind of ebb and flow with it. And I've been using it for 22 episodes. It's working just fine. So after a while, I may tweak some stuff, but just throw it out there, see what happens.
Just get started on something that works, and just as you go. And I think you have to sort of admit that, the first podcast is probably not going to be the best one ever.
No, not even close.
You look back at the most successful podcasts on any topic, real estate or otherwise. I promise you, those first few podcasts from whomever those popular podcasters are not the best ones ever. Yeah.
No, the last podcast I had was called Intentionally Inspirational. My first episode, I remember this is like 5-6 years ago. It was about 11 minutes long, and I literally was like, hi, I'm Jason. I have no idea who I'm talking about, and I don't know what this show's going to be about. I was completely lost, testing out the mic, and it grew and grew from there. And I eventually, I decided to shut that show down. It was just too broad, but I believe about 200 episodes. But yeah, that first podcast, it was just a documented admission of, I have no idea what I'm doing. So kind of funny. All right. So here's a little bit of a curveball. Do you have a story that you can share about your real estate investing journey that you haven't shared publicly? It can be anything you want. I'll tell you, most guests think of something that's like a funny story. Sometimes it's about tenants, just anything that just pops out in your mind. It's open, fair game.
Good question. Boy, that's an interesting one. There was I was invested in a deal as an LP, actually back before the real estate crash. So I invested in the deal in like 2004 or 2005, something like that. Um, and nobody saw the crash coming at that point. And it was a value add deal. So it was renovations, increase rents, turn it around, sell it in 5 years or something like that. Well, the 5-year mark hit right in the middle of like 2009, 2010. So there was no selling it in 5 years.
Yeah.
And essentially, it was a deal where all the upside was based on selling it at the end. They were just taking all the cash flow and sort of reinvesting it into the property.
Yeah.
Anyway, the funny, I guess maybe the funny part of it, not so funny, maybe, I don't know. Right before the property was about to sell, one of the tenants allegedly had a slip and fall accident on, I don't know, one of the landings or stairs in the property. And so, the whole team that was running the project basically had to like put the brakes on selling it for a bit and deal with sorting out the legal challenges that came with this person who happened to just, magically slip and fall right before it was going to be sold.
Mm-hmm.
And she was asking for, a ton of money. And then at some point, there must have been some realization that wasn't going to be a reality. And so it became a very reduced amount of settlement just to kind of close the whole thing out.
Yeah.
It was just one of those things that like, the deal ended up going like 10 years. Because that was just the time that it took for the whole thing to for the market to kind of recover, whatnot. Now, that said, we still basically more than doubled our money.
Nice.
It just took longer than you thought, right?
Yeah.
It's a real thing, which is, the power of real estate, right? So, if you play the long game, and sometimes it's longer than you think, it'll still work out in the end if you're doing it right and you're working hard to make it happen. But it was funny, just as we were all so ready to sell and so close to the end, and then they'll put the brakes on that for a little bit.
Absolutely.
Just unexpected things. You just never know what you're going to get sometimes.
Oh man, I totally understand. All right, so let's say you had a conversation with another capital raiser just getting started, like me. What piece of marketing advice would you give them? What would you say? It's just like, hey, start here, follow this path, and see what works for you. What would you say?
I would say just keep your message going of what you think is important, and be patient.
Yep.
It's not going to happen overnight. Yep. And you don't get anywhere by starting and then quitting. So it's a matter of being patient and keeping up with the messaging, and the traction will come. You stay consistent.
Yep. That's great advice. I was telling my wife, ironically, this morning, right before this podcast, I was down in the kitchen talking to her, and I said, hey, you remember so-and-so? And she's like, yeah, I know the name. I said, well, we were, I think in the ClickFunnels community, we met online years ago. We were doing the same type of thing. I said, our business has really grown, and he's still at the same place he was like 5 years ago. She's like, why is that? I said, literally every week he's doing something new. Like there's no consistency at all. It's like you're creating apps this week, and next week you're all about AI. And it's like the guy's just throwing stuff at the wall to see what sticks. And yeah, I think people have this idea that when they hear marketing, they're like, oh, I'm going to flip a switch and my life's going to change overnight. I didn't see any results for my email list for this business for years. Nothing happened for years. And I was building a list of the wrong people, and I was doing it the wrong way. And then once I just did what you said, I was like, this is who I am. Let's see what happens. One day it worked, and then it worked some more, and it worked some more. And it definitely doesn't happen overnight, but no, that's great advice. All right. So we are recording in May of 2023. As you look forward to the end of this year, what are you most focused on in your business between now and the end of the year?
I think it's really just kind of, continuing to get my message out and continuing to draw in more people to, subscribe to the newsletter, listen to the content that I have to share, help educate more people on the benefits of real estate and why it makes sense.
Mm-hmm.
as an investment option in addition to, or as an alternative to stocks, whichever you prefer. I'm pushing in addition to, but that's kind of my goal for the rest of the year, is just to kind of help reach out to as many people as I can connect with who are interested in listening to what I have to say.
I think it's really smart. And I think that angle is going to be a lower mental barrier of entry for a lot of investors. You know what I mean? We're like, okay, I like what this guy's saying. It's diversified, not, make a drastic move. So I like it. Yeah. For anybody watching or listening, how can they connect with you or learn more about what you're doing now?
Yeah, sure. So LinkedIn's a great way to keep in touch with me. I'm pretty active. Try to post every day and interact with everybody's stuff that comes in my way. My LinkedIn name is Brian Armstrong, SE, or structural engineer. There's a lot of Brian Armstrongs on LinkedIn, so you got to make sure you got the right one. I think I'm the only Brian Armstrong SE on there. Awesome. Anyway, yeah, so that's a great way. I also have an ebook on my website if people want to check that out. It touches on a lot of stuff that we talked about today in a bit more detail. That's progresscapitalgroup.com/7 reasons. I go through my 7 reasons plus a bonus why I think real estate investing makes sense in addition to stocks. So I kind of outline in more detail, all the benefits that I see of real estate and how to get involved in an investment, how it's really not that much more difficult to get into an investment in real estate than it is to get into an investment in stocks. It's obviously understanding the metrics and, understanding some paperwork and signing some paperwork, but, it's not a whole lot more complicated than that. Those are kind of the 2 main ways. And, folks can reach out as a direct message on LinkedIn. They can email me, brian@progresscapitalgroup.com, and I'll be happy to answer any questions anybody has.
All right, man. Sounds great. Well, I really appreciate you coming on the show. It was fun.
Yeah, I really appreciate you having me. That's always fun.
All right, man. Thank you for listening to this episode of the show. I had a great time making it, and I hope you really enjoyed yourself listening to it. If you want to keep up with all things Real Estate Investor Marketing Stories podcast related, I encourage you strongly to go to reimarketingstories.com and signing up for our podcast newsletter. We will simply keep you up to date with what's going on at the show, new episodes, and things like that. reimarketingstories.com. So hopefully today's episode and the other episodes that you'll listen to will remind you that as a real estate investor, everybody starts at the beginning, okay? Our guest today and the other guests that you will hear on this show will share their real story, right? They'll tell you what worked, what didn't work. And I want you to remember one thing, if you remember nothing else today. It's possible for you too, okay? Never stop going and keep following your passion. Finally, today's show has been brought to you by capitalraisingautomations.com. If you're an active capital raiser and you are ready to learn the 3 areas that are holding you back from raising more capital, I strongly suggest you check out capitalraisingautomations.com. Check out our free 10-minute video there, and you let me know if it doesn't provide you value. I'm sure it will. All right, thanks again for listening to the show this week. Hope to see you next time. Take care.